It's the final week of the year 2021, and in this session of our panel discussion, we revisit some of the headlines concerning the economy amid the prolonged pandemic. I have Professor Song Soo-young from Chung-Ang University. Professor Song, it's a pleasure to see you again.
Yeah, thank you for inviting me.
I also have Professor Yang Jun-seok from the Catholic University of Korea. It's good to see you again, Professor Yang.
Happy to be here.
Professor Song, let's start with a brief assessment of the world economy for this year.
I would like to say the inflation suspense goes on. Even though the world economy struggled to return to what it used to grow, however, because of the outbreak of the variant of the coronavirus, Delta virus, and Omicron, so that caused hampering of the world economy recovery. But overall, despite some inflation is a threat would be maybe in the future, but however, still there is a divergent response and divergent inflation level in across the Atlantic Ocean and then in China and the Asian economies. So overall economy is we have to wait and watch what's going on in the future.
Right. And having said that, Professor Yang, in your opinion then, what is your assessment of the Korean economy for this year?
Okay, well, Korea has been known to make the fastest progress back to normalization, but it's because Korea wasn't as hit hard by the coronavirus as other countries were in 2020. A lot of the high growth rate that we see this year in some countries are basically bounced back from where it was in 2019, and because Korea did not fall too much in 2020, it didn't rise too much in 2021, but on the other hand, because we didn't fall too far back, we had relatively easier time, I think, in adjusting, which does not necessarily mean that it's been completely easy. Now, 2020 growth rate was minus 0.9% compared to, say, US, which was minus 3.5%, and Japan minus 4.8%. And Korea did not go through lockdowns and shutdowns, which artificially froze the economy in 2020. So in 2021, we expect about 4% growth. That's lower than, say, the United States, which is expecting 5% growth. But still, I think we've done a very good job. And the reason is that we did the protection against corona fairly well in 2020. Having said that, though, when we talk about going back to normal, we're going back to the economy of 2019. And 2019 was not a very strong position for Korea. And we were seeing some results from some fundamental problems that Korea had, which resulted in slow growth. And we're going back to that slow growth. Right now, Korea is expecting higher than potential growth next year, partly because of the corona bounce back that it still have to take place, but still we'll be going back to the state of very low growth and potential output. And so we need to address the fundamentals of the Korean economy again, because, well, we might have done very well dealing with the coronavirus, but during the last 2 years, we really didn't do much about the Korean fundamentals behind the economy. So it's time to get addressed to the fundamental problems.
Right, and I'll get into that later on then. First, and Professor Song, pundits have linked, though, Korea's economic recovery to its exports, which appear to have been very little affected by the disruptions in the global supply chain. What are your thoughts?
I think we have performed very well in terms of the export, and also that has been supported by some surging inflation in the United States and the European countries. And also, maybe we take advantage of the position between the conflict between China and the U.S. and as long as the United States try to contain China, and then that would turn out to be currently, until now, it is beneficial. At least we have marginally enjoyed the benefit of that conflict. But otherwise, it could be a really serious obstacle or threat against us. So anyway, that is related with the political issue. And in terms of the sectors, because the semiconductor and the shipbuilding and those areas are automobiles, we have shown very strong recovery, and the huge inventory is is stacked, accumulated. So that means that because of some supply chain disruption and freight trading, then that causes some problem. But so far, so good, and I expect in the future that would be the problem of supply disruption would be alleviated, and then we could continue the current trend in the future.
So essentially, you do see the export trend continuing into the new year, with semiconductors driving our exports. Right. Professor Yang, let's move on to the local stock market then. Now, earlier this year, that is, after surging past the 3,000 level, the Kospi has been hovering below that level for most of the second part of the year. What is your assessment of the local stock market?
Okay, I actually think it's a good news that the stock market is not rising as quickly as it did last year. Because if we do some calculation, if you compare the stock market highs from the first quarter of 2020, that's before the pandemic, and if you compare it to yesterday's closing numbers, Kospi went up by 32.3%. Kosdaq went up by 46.0%. Now, the stock market has gone up in most countries, but especially in Korea and the United States. United States Dow went up by 21.7% with the same criteria. S&P by 39.6%, and NASDAQ by whopping 59.4%. It's hard to believe that the fundamentals of the companies in these stock indices went up so much during the last 2 years. Some technology companies, some biotech companies, they may have some reason to have stocks grow at the speed, but for most companies, probably not. They've probably gotten weaker during the pandemic rather than stronger. So what is driving the stock market? Probably the excess liquidity, a lot of money that we pumped into the economy to help prop up the economy in 2020 and part of 2021. What we really don't want the bubbles to build up from these excess liquidity, and the fact that the stock market is having some trouble growing this year, I think is an indication that we're heading toward a soft landing rather than a hard landing. So I actually look at stock market doing not so well this year as a bit of a good news, because there will have to be an adjustment in these numbers.
And so what are your prospects then for the local stock market next year then? Next
year, as the interest rate goes up, I don't think the stock market will do well, but there's always a possibility, because a lot of these bubble mechanics depend on psychology. So if the stock market does rise at a fast trend, but if the productivity and profitability of these firms do not rise as quickly, then we're going to see a possibility of a harder adjustment, which I think will be more detrimental to the economy in the long run.
Right. Meanwhile, Professor, so Korea's consumer prices back in November rose 3.7% on year, the highest in about a decade. Do you believe this trend will persist into the new year?
No, I don't think. I'm in the still transitory team about the future inflation. Of course, in the United States, they have shown the largest increase of the inflation rate, annual percentage interest rate, inflation rate, more than 6%. And then they begin to worry about the future. However, I believe, and I think, I agree with some other economists about currently the inflation, transitory inflation is continued longer than expected. That is clear, but unless it is embedded in the people's expectations, which implies that just producers and the manufacturers or other owners or shop owners just begin to increase the price just because of the anticipation. That is the situation where the inflation expectation is embedded within the people. That causes a serious problem, because wage and the price simultaneously goes up. But that is most unlikely to be realized in the future, because of in Europe, relatively the inflation rate is lower than U.S. And in Korea, still, as you mentioned, that we have seen that some CPI is very high. However, the producer price index and some oil price and the food price actually have shown that some trend has been reversed. Therefore, I believe that this would not continue to the future, because even the board of members of the Federal Reserve, they anticipate in year of 2023 the inflation will go down, and the long-term yield for the bond also indicates that long-term inflation rate is relatively remain low. Therefore, I don't think it would continue to rise over the next year.
Right. Professor Yang, aside from concerns over inflation, then another worrying reality here in the country is the rise in household debt. Now, in fact, personal debt apparently among young Koreans is said to have risen quite significantly. What are your thoughts on this?
Okay, well, I think the household debt is going to really drag down the economy unless we bring it under control. If you look at the recent Bank of Korea report, the amount differs between report and report because they use slightly different definitions each, but the household debt is thought to be about 106% of GDP. Corporate debt, I also should mention, is even higher, 113% of GDP. And we haven't done this calculation with the third quarter numbers, but the second quarter numbers by IMF shows that Korea household debt is growing the fastest in the world, and the household debt to GDP ratio for Korea is usually either first or second among the OECD countries. So it has a potential to drag down the economy, and if these debt turn out to be bad debt, which doesn't seem to be right now, but there's possibility in the future, then it could cause some major economic problems. But at the very least, it's likely to cause some drag in the economy, because even if the economy recovers, the interest burden will go up for these borrowers, so they will not consume as much, and that will probably drag down investment as well. For the young people, they seem to be looking at this as an opportunity to get some money not only for their income, but save up for their retirement, because the interest rate is so low. They've been doing what a lot of Koreans call yonker, use even your soul as collateral to get loans. And they've been taking very low interest loans and trying to buy housing units, because a lot of them think this is the last chance that they'll get housing at reasonable price, and then they've also invested in stock market and crypto coins. So they may have a lot of problems if the stock market goes down, cryptocurrency market collapses, or the housing prices go down. That is a real concern. But luckily, while it is proceeding faster than we expected, and about 27% of household debt is for people in their 20s and their 30s. Still, I think that it's relatively manageable right now, and even if these people in their 20s and 30s get into problems, they at least have somewhat of a long period to get over the problems, unlike, say, people in their 50s and 60s who are very close to retirement. But also, I think this is, I don't want to say this too lightly, but it's a teaching opportunity. Not everything will go well. If the interest rate falls, it'll rise again sometime. And I think we need to have this lesson in place to stop some of the speculative fevers that we've seen in the last 20 years in the Korean economy.
It will be a tough lesson then. Professor Song, as part of efforts then to rein in household debt and inflation, the Bank of Korea has hinted at further hikes in its key interest rate early next year. What is your outlook on the matter, and what do you believe is the potential impact of such a move on the real economy?
Yeah, considering the Federal Reserve Board's move, this hike of interest rate as high as 1% or so, which means that 3 times increase is expected for in the U.S. Then, for the Bank of Korea and for the Korean economy, I think we do not need such a hike of interest rate, because that could cause some subdued demand. And also, I would like to draw some different perspective on Professor Yang's perspective on the household debt. Of course, the household debt increase growth rate is the highest ranked in the OECD among the G20 countries. That is true. However, that's because our government's debt is too low in comparison to other countries among the G20 countries, and only we have just 50% or so. Therefore, it means that the government does not bear the burden of some bad economy. Households directly bear the burden. And also, as Professor Yang mentioned, that some youngsters fever of the speculation and the borrowing money with the low interest rate. But on the December 16th, I have found the data about the level of the debt and the net asset and the asset level for the different ages. So the most important and of concern lies rather than the younger age, lower than 29 years old. Actually, their percentage, even though because their asset level is very small, but actually they have enjoyed some very large increase of the net asset. And also, what is most concerned is should be focused on the between 30 years old and the 39 years old household debt, because household, they have a huge debt level and some growth rate is relatively very high. So news media always focused on some so-called young girls, the feverish speculation among the youngsters. But however, I would like to say about the truth lies in what is of concern and what is of importance lies in the household with 30 years old and 39 years old. So those are most we have to watch over, and then the government to take care of that issues on. That's
right.
my.
I see. Do you suppose there's a way to better handle the debt incurred, that is, by households in their 30s?
So to that regard, because of the high interest rate, should be cautiously conducted. Otherwise, that could cause some very bad effect on the household whose age is between 30 and 39 with a family, and then most of them are married. So
perhaps
that's
with young children.
Yes.
Right.
So,
Right. Professor Yang, let's now move on to the fundamentals that you mentioned earlier on during our talk, the fundamentals that the government needs to address that will perhaps sustain our economic rebound next year. Tell us a bit about that.
Okay, well, Korea in the last few years have really concentrated on growth through government spending. Even before that, since 2008, Korea has been lowering its interest rate to historically low levels. That has really not hit investment as much as we had hoped. Usually when we lower interest rate, we hope that investment will go up rather than household debt. But in the last 15 years or so, it's actually turned out the opposite way. Household debt has gone up, but not so much the investment. So why hasn't the investment gone up? It's right now the most likely culprit seems to be the economic environment, which encourages economic activity. There's a lot of regulations that prohibit investment in certain industries, slow down the development of certain technologies, and even perhaps have negative effect on job creation. Those should be removed. And Korea, in the last 5 years or so, has been very dependent on government spending. And Professor Song has mentioned that we need to help 30-year-olds. It's not very clear that the money is going to the people who really need it. And it's not very clear whether it'll be sustainable in a sense that these assistance jobs which are created by the government will remain after the government spending is taken out. Professor Song is perhaps not as concerned as I am in growing debt ratio for the government, but the problem is there's some hidden debt, especially in the public corporations, and the future obligations that we should be concerned about because of the demographics problem. So those are the factors. Those are some factors that we need to consider as well. Basically, what Korea needs to solve most of these problems is increased productivity. If we have a higher growth rate, then the debt GDP ratio will not be as much of a problem because, well, we're growing faster, so we can afford to have somewhat higher debt. Also, hopefully, it will have more job creation, and that will help the people in the 30s the most because, well, they're the prime age. They're young, new workers in the economy for the most part. But in order to have these sort of regulatory reforms and such, there's a lot of not only problems in carrying out these reforms, but also there's going to be a lot of political reforms as well. A lot of these regulations are dealing with interest groups, which have some stakes in maintaining these regulations. And for the last 10 years, 15 years or so, Korea has been very reluctant to take on these interest groups. But unless we start addressing these problems, our stagnant economy may get worse and worse.
And what are your thoughts, Professor Song, on how the government is perhaps responding to the problems that Professor Yang has just mentioned?
Professor Yang has a very pessimistic view because of unless we have some very impressive productivity enhancement among the population and labor work. But however, under the process of the digitalization, we cannot avoid such a reduced productivity, particularly for the labor workers, because but simply because they are less productive, and then we cannot lay off those people. The government and our country must take care of them, and so because of divergence of the growth of the economy and success high productivity, because of the semiconductor and IT related, such industries could enjoy the very high growth, but still other manufacturing or some travel industry, those have suffered from some digitalization of the. Therefore, we have to take care of both, particularly because simply we cannot lay off them. The corporations lay off the labor workers for the lower productivity, but as a country, we cannot do that.
Right.
So that means that is a rebel against the government.
Right.
So to speak, I believe that the current status and the Korean economy has fared quite well in comparison to other countries, actually in comparison with the U.S., because the divergence has been very deep and it could cause a really hampering of the recovery of the U.S. economy. But however, Korea has actually the Gini coefficient has been reduced a little bit, and because of the government tried to help the low productivity labor workers, and so that is my prospect, and continue this trend.
Right. Staying with what Professor Song has just mentioned, Professor Yang, there are concerns that the Korean economy may note a K-shaped recovery next year. What are your thoughts on this, very briefly speaking?
Well, I think K-shaped recovery will continue because some of the industries especially IT industries, are naturally fitted toward the coronavirus, and some traditional service economies are not. And the problem is the service industries very often have very low productivity and very small businesses as well. So currently these small businesses are having problems because of distancing, and if a lot of these small businesses do go out of business, then for unskilled workers there might not be a job to come back to, even if we recover from the coronavirus. So that is basically a very serious problem. Government has tried to direct support to these smaller companies, but I'm not sure if they'll be successful because the amount of assistance is too low. And Korea does have, if you look at the household income by income groups, the richer part of the population, their income has gone up quite a deal, but the poorer households have not. But this year, it's been somewhat, the Gini coefficient that Professor Song has mentioned has gone down because of a lot of government assistance, but there'll probably not be as much government assistance in next year or the year after unless coronavirus goes on for longer than we expect. So it's a problem that we do have to deal with. I do agree with Professor Song to the extent that I think Korea needs to have a more efficient welfare system so that even if we do have a more flexible labor market, the people who get fired will not get impacted as much.
Right, so the common consensus is a stronger welfare system then. All right, Professor Yang, as always, thank you very much for your thoughts, and Professor Song, thank you very much for your insights.
Thank you.